Well, Delta Airlines is offering a $30,000 settlement payment to each person that was on one of their planes that tipped over and caused some people injuries. Now, a lot of people have this question is, how much is my settlement or damages if I'm injured, whether it's a plane accident or more likely a car accident? How is that taxed to me? Does this go on my 1040? Do I need to pay the IRS or state anything on that settlement? Well, in today's video, I'm going to break that down when you do need to pay and when you don't need to pay. I'm Matt Sorensen. Let's build wealth. Now, to know whether your settlement or damages are going to be taxable and your need to put it on your 1040 and pay taxes on it, you need to know what the damages are based on. So if I get a settlement check for something, what is that for? Now there's three different categories the IRS has. We have actual damages resulting from physical injury or sickness. We have emotional distress damages, and then we have punitive damages. Now the first category there, actual damages for injury or sickness, that is not subject to taxation. So the nice thing is if you're injured, you had an injury from something, an accident, this could be a car accident, maybe you're on the Delta case, you got injured, you got bruises, your neck hurt, whatever, that is going to be something that is not taxable. Now the next category is this emotional distress, which is a little more harder to pinpoint. That is typically taxable unless it's linked to actual physical damages or sickness. So if you're sick from the incident or actually injured from the incident, whether temporary or permanently, and that causes additional emotional distress, which causes more damages, then the emotional distress is not taxable. But if you had no physical injury or sickness, the emotional distress damages are going to be taxable. So there could be people on this Delta plane that got injured that are not going to have to pay any taxes on the $30,000. And there's other people that didn't get injured and just might have some emotional distress. Their settlement is going to be taxed. Now there's also the third category here of punitive damages. This is if Delta was so bad or whoever the defendant is in a case, they did something so egregious, you get additional punitive damages above and beyond the actual physical damages or sickness or emotional distress that you had. In the incidence of punitive damages, which is kind of like penalty damages, because that company or person did something so egregious, that is taxable to you. But it excludes wrongful death. If someone dies from the incident and there's punitive damages, the punitive damages for wrongful death is not taxable. Now I know this can seem a little bit confusing here, but basically what I want you to know is actual damages from physical injury or sickness are not taxable. That's not going on your 1040. You're not sending anything to the IRS or to the state on those damages. Emotional distress damages, unless they're tied to actual damages, those can be taxable, and any punitive damages are taxable as well. Additionally, any damages you claim, and this is from a trial or in a settlement that comes from lost work, is also going to be taxable. Now, damages from reimbursement of medical expenses or things like that, that is not taxable. So there's all these little nuances here of what's taxable and not. Focus on getting your damages for your actual injury or sickness. As you do, those are not taxable to you. Now, another type of claim where you may get a settlement or damages for is a discrimination case, whether that's sex or gender. Those damages are not taxable. For example, I represented a police officer who had a claim against the city, race discrimination, got a judgment on the case. That's not taxable because that was based on a discrimination claim and was a discrimination lawsuit. If this was some other type of workplace claim that was based on lost work or lost earning power, that typically is taxable. So if it's discrimination based though, the award and income to the person is not taxable. Now, one tip when you're settling a case is to state in your settlement agreement what the damages are for. State that it is for your actual injury or sickness, that it is not punitive damages, that it is not for emotional distress or some of these other things that can be taxable. The IRS typically takes face value on the terms of the settlement agreement when deciding whether something is taxable or not. They could still audit that, of course, and look into the underlying details, but generally they do follow the terms of the settlement agreement between the parties. Now let's go over a quick example here. Let's say you got in a car accident. Okay, there's 36,000 car accidents a day in the United States. Let's say you have one of those. We're all going to have one in our lifetime, and you're probably going to have a personal injury claim to make on it if you are injured. Now, is that taxable to you? Well, let's say in your claim with the insurance company and when you settled that you said, I lost work and that value was $5,000. I had emotional distress and that was $10,000. And I had physical injury or sickness and that value is $35,000. Now, the physical sickness, $35,000 or injury is not taxable. The emotional distress of $10,000 that's linked to that is also not taxable because it was linked to the injury from the accident or the sickness that resulted from it. But the lost wages are going to be taxable. Now, a lot of times you're not going to need to spell this all out. The settlement could simply just be for the injury and the emotional distress tied to it, which would make it not taxable. So when you go to trial, on the other hand, typically you're going to have damages in different categories, and a jury is going to say this much for lost work, this much for emotional distress, this much for punitive damages, this much for actual damages for injury or sickness. And so there's going to be more line items onto that, and you're going to be stuck with that if it comes from a jury award. In settlement, you do have the ability to negotiate that, of course, and what's characterized in the settlement agreement is typically what the IRS relies on to determine what is taxable to you. Now, learning what type of income is taxable and the strategies to minimize and lower that tax burden is critical as you're building wealth. Please subscribe to my channel. I'm giving you tips on how to save on taxes, build wealth, and protect your assets. I'm Matt Sorensen. We'll see you next time.